Hey, everyone, it's me. So we all know that the stock market is volatile, but do you think it will always go up in the long term? That is what we are going to talk about today. So if you want to find out whether or not the stock market will continue to rise, then stay tuned. So let's start by talking about what the stock market is. When you buy a share of stock, what you're really buying is a small piece of ownership in a company. So when you invest in a mutual fund or an ETF, you're actually buying small pieces of ownership in hundreds or even thousands of companies. So when you invest in the stock market, you're putting your money into the hands of company executives who will hopefully use it to grow their businesses in exchange for taking this risk. You usually get paid in two ways. No is through dividends, so some companies like to share their profits with shareholders by paying them a portion of their earnings every quarter. And no I is through capital appreciation, so when a company grows, the value of your investment will increase because you own a small piece of that company. So now that you know how the stock market works, the question is, will it always go up? To answer this question, let's first talk about what the stock market has historically done over the long term. Since the beginning of time, there have only been two assets that people have used to build wealth: physical assets and financial assets. Physical assets include things like real estate, gold and commodities. Financial assets include things like stocks and bonds. Now both types of assets can be good investments, but which one has performed better over the long term? Well, that's where things get interesting. If you had invested in gold at the beginning of the 20th century, you would have seen your investment grow by 17% by the end of it. That sounds great until you realize that the SP 500 returned 17.9% over the same time period. Now here's another one. If you had invested in a broad-based index fund that tracks the entire stock market, your investment would have grown to 33.50% by the end of the century, and that means that the stock market has outperformed every other asset class over the last years. Now some people might say that this is just a coincidence, but the numbers tell a different story. If we go back even further, we see that from 1900 to 2014, stocks have generated a 6.8 annual return while bonds have generated a 5.1 annual return. Real estate has generated a 4.7 annual return while gold has only generated a 2.1 annual return, and that means that stocks have outperformed everything else by more than 3 times. Okay, so you might be saying to yourself, okay, but what about the bad years? After all, investing in the stock market is risky and we've seen some pretty bad crashes over the years. How could anyone say that stocks are a good investment after seeing the market lose 89% during the Great Depression, 78% during the dot-com bubble, or 55% during the 2008 financial crisis? Well, here's the thing, even though those were horrible times for investors, the stock market has recovered from all of those crashes and set new records. In fact, since 1920, the market has only had 5 years decline, and 3 of those declines have already been recovered from. Also, since 1950, the market has never lost more than 20 in a single year. But what about inflation? I mean, if you get a return on your investment, that sounds pretty good until you realize that inflation has averaged 2.7% per year over the last 20 years, so a return doesn't even keep up with inflation. So what kind of return do you need to beat inflation? Well, you need to earn around 7.28% annually, and guess what? The SP 500 小时has done that every single year since 1980. Now, some people might say that the stock market was built on the backs of slavery and colonialism and wouldn't be where it is today if it wasn't for the exploitation of cheap labor and natural resources in developing countries. And to that I say, they are absolutely right. Capitalism and the stock market have caused a lot of pain and suffering throughout history, but we can't change the past, and pretending that it didn't happen won't make it go away. The best thing that we can do is learn from our mistakes and try to create a better future. So the question is, will the stock market continue to rise in the future? Well, no one can predict what will happen in the short term, but history suggests that it's a pretty safe bet that it will continue to rise in the long term. You see, even though the stock market is volatile in the short term, it has a strong upward trend in the long term. This is because companies constantly innovate and find new ways to serve their customers. They also expand into new markets and acquire other businesses, which makes them bigger and more profitable. All of this innovation and growth leads to higher stock prices over time. However, it's important to note that the stock market is not a zero-sum game. That means that one person's gain is not another person's loss. For example, when Apple sells a product, they create value for their customers, but they also create value for their shareholders. That's because Apple pays taxes on their profits and the government uses that money to provide public services like roads, schools, and parks. These public services make the economy run smoothly and efficiently, which creates a ripple effect that benefits everyone. Of course, this doesn't mean that the stock market is without its problems. One of the biggest issues is that it is concentrated in the hands of a few large companies. For example, the top US companies by market cap make up around 60% of the total value of the stock market. This means that if these companies do well, the stock market does well, but if they underperform, the stock market suffers. This is not necessarily a bad thing since these companies tend to be leaders in their industries and are constantly innovating, but it does create some risk. Another issue is that the stock market is largely driven by speculation. That means that a lot of the price movement is based on what people think will happen in the future rather than what has already happened. This can lead to some pretty wild swings in price, especially during times of uncertainty. However, this is not unique to the stock market. In fact, it's true of any investment that involves some level of risk. Despite these issues, I believe that the stock market will continue to rise in the long term. Here's why. First of all, we live in a capitalist society. This means that the free market is the driving force behind our economy. Capitalism has a lot of flaws, but one of its strengths is that it encourages innovation and entrepreneurship. As long as this remains the case, I believe that the stock market will continue to grow. Secondly, the world is getting richer. Yes, there is still a lot of poverty, but the global economy is growing and getting richer. This means that there is more money to go around and more money to invest in stocks. Finally, the stock market is becoming more efficient. Thanks to technology, investors can now trade stocks more easily and cheaply than ever before. This means that the stock market is becoming more liquid, which makes it more attractive to investors overall. I am optimistic about the future of the stock market. I believe that it will continue to rise in the long term due to the forces of capitalism, economic growth, and technological efficiency. Of course, there are risks, but that's true of any investment. If you are willing to take on that risk, I believe that the stock market can be a great way to grow your wealth. Alright, thanks for watching. Please don't forget to hit the like button if you haven't done that already. Let us know in the comments section below if you think the stock market will continue to go up in the future. If you want to learn more about the stock market, we recommend checking out our video on how to invest in stocks.